Yeah. So swing trading 1. Swing trading 1.
Okay, so swing trading versus long-term investing. Which one is better?
That's the hook, right?
Yeah.
Okay. Yeah. Do it one more time.
Okay. So swing trading versus long-term investing. Which one is better? So Darren, I think you have a story for this one. Like it's
Yeah, first of all, hey everybody, I'm Darren.
I'm Vic.
Welcome to Average Guys Finance. Yeah. So today we're talking about swing trading, and a lot of people make a lot of money swing trading.
Do they?
That's what they say. That's what they say. There's a lot of people selling courses and doing YouTube videos about swing trading to how to make a lot of money. So
I'm not really sure about like what swing trading is exactly. So why don't you explain it, like how define it for us?
Okay, and I don't even know if I'm right.
Okay.
I think swing trading is so you pick a stock or a bunch of stocks. And so day trading is you want to close out all of your positions by the end of the day. So you're holding nothing by the end of the day.
Yeah.
With swing trading, you might be holding a stock for a day, 2 days, 3 days, a month. Basically, what you're doing is you're buying it when it's on the dip, when it's down, and then selling it when it goes high.
And I think you're basically looking for like a 2 to 3% movement in a stock.
Right.
So if you gain like 2 or 3%, you're gonna sell it.
Yeah.
And then hopefully it goes down again, and you can rebuy it, and you kind of repeat that process, right?
Right. Yeah. So So now my story about swing trading. Vic has been investing way longer than I have. I'm new, so that's why I think that's one of the things that are interesting about these videos, because I'm the newbie and you have a lot more experience than I do. So Vic had structured a very, very nice portfolio for me, and it was doing very well. Everything was in the green. I think you're outperforming the S&P 500 and
so far this year,
by a substantial amount, and not just this year, a few years anyway. So he had put together a very, very nice portfolio for me, and it was doing well. I got my tax return, and I thought, I had been watching a couple. Should we name the stock? Should I say the stock that I did it with?
Yeah, sure.
Okay, so Shopify. I noticed that like it would be down $30 one day, and then up $30 another day, and then down 50, and then up 50. So I thought, let me leave my portfolio the way it is, and let me use my tax return to see if I can do some swing trading with Shopify. And it was going really well for about 3 weeks, right? I was doing very, very well. I set a modest goal. Now, like, people who are hardcore investors might laugh at the amount of money that I was setting a goal to make, but I was just trying to make like a couple of $100 every day, right? With the swing trades. And it was going really well. And then I did it with Amazon too, and then that worked out well. So I was like, you know what? Why am I wasting my time with a slow performing portfolio? Why don't I cash everything out and then swing trade with all of the money in my portfolio? And then
I remember the night that you did that. And we were kind of texting back and forth,
right?
Saying
I'm sweating right now.
And we were texting back and forth, and we were just and I was telling you, well, okay, maybe you can free up some money somewhere to to put towards more swing trading, because like it wasn't something that I was into, but I was like, I wanted to support what you were doing,
right?
And then you sent me a screenshot of your portfolio,
right?
And I was like, where's the shit? Where is everything? It was like, did you sell everything? I think you sold everything except a Barrick Gold. A Barrick Gold.
That's right. Yeah. I held on to Barrick's Gold.
And I was like, what's going on? And I was like, okay, this could work, maybe.
and then it was working for another week, right? I was doing really, really well, and then we'll put up a screenshot of what happened to Shopify on. And then I bought Shopify one day, expecting it would go down a little bit and then come back up, but then it went down, and 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 it kept going down, and then I finally had to sell just to stop my losses. But it was not basically everything that I had made over the previous month. I lost right there.
And I think it was actually a good idea to sell. Because it just kept going down.
It did.
After you sold it as well.
Did, yeah.
So it's...
We were toying with the idea of holding it until the earnings call, and which happened last week. And but I mean, it did come back, but I didn't know it.
On the day of earnings, it went up 10%.
Yeah.
Because they made a one-time $1.1 billion gain off of an investment that they made in another company.
Right. So it wasn't even their revenue, right? It was
it wasn't their revenue from their business. Mm-hmm. It was revenue from an investment that they made.
Right.
So, but it was like a one-time gain, and other than that, the share price is still with their price to earnings ratio. It's still very overvalued.
Okay. So I have another chapter to this story, and you don't know the chapter of this story. Okay. So after I had sold the Shopify when it was down, right, and it was still going down the first time, I sold it, and then Vic structured another beautiful portfolio for me. He was like, okay, put this amount of money here, put this amount of money there, and then things will be okay. And then the earnings call for Shopify came out, and I saw it going up and up and up. So I did it again. I sold everything in my portfolio. I bought Shopify, but the thing was, I bought it at the end of the day, thinking, okay, so it went up. I thought it was going to go up to 1,300 and go up a little bit more, right? So I bought it high again at 1,285. And then the next day it just went down again and again, and I lost some more money. But yeah, so here's the thing. Now, so I sold it, right? Okay. And I put everything into Berkshire Hathaway B. Okay. Right. So, okay. Here's the thing. here's the ironic part. Okay, so for that month that I was doing very, very well with the swing trading, right? I looked back at Berkshire Hathaway B, and if I had just put everything into Berkshire Hathaway B at the beginning of the month, I would have finished the month higher with more money than I did with all that swing trading that I was doing, watching the market every day, watching this, watching that. When am I going to sell? When am I going to buy? It was just like it takes up all of your mental resources.
Yeah, and Berkshire, like it's I guess you can kind of call Berkshire kind of almost like a proxy of the S&P 500.
Yes.
Because they pick a lot of the better companies in the S&P 500, but they also invest in a lot of the better companies in, say, China and stuff. Mm-hmm. So it's I do agree with that move.
Just for
putting it into Berkshire. Yeah.
Just for the next, probably until the fall, so I can make back what I lost.
Okay.
Right, and in the meantime, I'm going to keep contributing and then buying the stocks that I used to have in my portfolio.
So what's a lesson that we learned from this?
The lesson that I learned. Now, keep in mind, so I lost some money, right? But it wasn't a sum that was crippling, but it was just enough that it was an expensive lesson, a lesson that I won't forget. The lesson is getting rich quick probably is not getting rich. What is the lesson here?
Yeah. Well, the thing is, like, okay, so when I first started investing in single stocks, I made some stupid mistakes too.
What made me feel better? What was
I invested in the General Motors. So not General Motors,
GE.
General Electric.
Okay, all right.
So I invested in General Electric.
Okay.
And I invested because they were big into renewable energy, and I thought, renewable energy is going to do well, but I didn't account for all the other problems that they had at the company. Mm-hmm. And since I bought it, the share price just kept tanking, and there's like more and more bad news came out. They got delisted from the Dow index. They got sued for alleged accounting fraud.
Oh my God.
And then that's when I cut it. I decided to cut my losses.
Yeah.
But it's like, it just goes to show that investing in single stocks can be risky. You really do have to do your research. You have to read the books, read the articles, make sure have the knowledge to know what you're investing into, and knowing how to evaluate companies. And if you're not able to do that, or if you're starting out, if you're just starting out and you got a small amount, just go with the ETFs. Just go with like the S&P 500, or just invest in the entire Toronto Stock Exchange, that kind of stuff. And
because they've already done that work for you, right? Like they
yeah, and you're investing in the entire market. Like it's almost like you can't really lose.
Right.
But it's also like if you're starting out, the best way to gain money is to go out and work and save and put more money into your account.
Right.
That's really how I did it.
Mm-hmm.
Like I started out with like $3,000 or something like that.
Yeah.
And every month I just kept adding more and more to it, and then eventually you're gonna end up with some money.
Yeah.
So I mean that's how it works.
Right.
So it's like you don't have to like, don't think that when you're starting out you have to like play all these tricks and stuff like that. It's just it's very simple, really, if you think about it.
It is.
Like, people complicate it way too much.
It totally is.
Yeah.
So like I said, like the month that I was doing the swing trading, it was just like I couldn't think about anything else that I wanted to do during the day, right? It's like from 9:30 until 4, you're just like looking at everything, and it's just not. I didn't find it a very good way to live. But after the second setback, the second Shopify setback, when I decided just to put everything into Berkshire Hathaway B for the time being, that afternoon I was just so relaxed, you know.
Because you're gonna hold on to that.
I'm gonna hold on to it, and I know it's gonna come back, and I know it's gonna grow, right? So it's
I mean it's a solid company that makes profits every year, and they have some good cash flows, and they're actually a very diversified business too.
Right.
So
if you look at their charts, like you look back a month, 2 months, 3 months, a year, 2 years, 5 years, 10 years. It's just constant growth. The only dip was the March 2020, right?
Doing crashes and stuff.
Yeah.
But I think like the thing is like in terms of you were saying about your stress levels.
Yeah.
So when the stress level of like having that short-term mentality of like constantly checking your portfolio and seeing what it does, and also like deciding like, okay, do I sell now? Do I buy now? What do I do? It's like, and I went when I was investing, like I went months without even looking at the portfolio. It's just because I knew it was like, okay, when I started off, I was basically just in ETFs, and it's like it really didn't. I was like, okay, I'm not going to check it all the time because I know generally it's going to be okay.
Right. That was the other nice thing that happened too. The day after, I totally missed the 9:30 bell. Like I wasn't even paying attention to what was happening at 9:30 because I understood that, like, you know, I just knew that my money was going to be okay with.
And if you're like a long-term investor, you can sleep in. You can just like while the market's going on, you can just you can go work, you can take a walk, you can go play tennis.
Right.
It's like that's the luxury of like playing it passively instead of like trying to be like an active trader all the time. Like you basically have to be in front of your computer screen all the time. Do you want to do that?
Well, some people like that, but I didn't like that.
I mean, I personally, I wouldn't want to do that either. But it's like, it's basically like being trapped in a casino 24/7.
Yeah. Again, some people like that though.
I guess so.
But again, it was just like it was just weird. Like it was just weird to look back at Berkshire's numbers. Like if I had just put everything into Berkshire on April 1st, I would have come out ahead, you know, with all that.
And I guess that the bottom line is like maybe just like looking at a company that you know is doing well and is going to go do well in the future, and just sitting on it and just like and just letting it ride instead of trying to like, you know, time the market like daily or weekly and stuff.
Right. Yeah.
Okay, so so that's Darren's a swing trading.
That's
story.
my swing trading story. Anyway, there you go. All right, thank you everybody.
Hey everybody, we hope you liked that video. We hope it didn't make you too angry. We don't want to make anybody angry. But
if you liked it, please like and subscribe.
Yeah, subscribe is the big thing. Just hit the subscribe down there. And then here are some more videos that you can watch if you feel like it.